Okay, let's dive right into this. For decades, practically our entire lifetimes, the US dollar has just sat comfortably at the absolute center of the global financial system, right? Countries everywhere stacked up dollars, central banks loaded up on US Treasury bonds, and international trade was almost entirely settled in the greenback. America's financial dominance felt, well, permanent, untouchable even. But in this explainer, we're going to unpack a historic shift that is literally unfolding right in front of our eyes. It's a monumental pivot in how the world's most powerful financial institutions are choosing to store their wealth. And when I say monumental, take a look at this bombshell finding from a European Central Bank report. By the end of 2025, the makeup of global official reserves had fundamentally flipped. Gold, yes, physical gold, has officially become the largest reserve asset held by central banks worldwide, sitting at about 27%. That means it's actually surpassed both US Treasuries, which are at 22%, and the euro at 15%. Guys, I really want to emphasize just how staggering this is. For the longest time, U.S. Treasury securities were viewed as the ultimate safe haven, the single most trustworthy investment on the planet. But according to the ECB's data, that is simply no longer the case. To make sense of all this, here is our roadmap for the explainer. First, we'll look at this historic financial shift. Second, we'll ask, why buy so much gold? Third, we'll tackle the de-dollarization reality. Fourth, we'll identify the major gold buyers. And finally, we'll look at what this new monetary order actually means. All right, let's jump straight into part one, a historic financial shift. This is about way more than just the price of precious metals. This is a massive story about modern geopolitics, exploding global debt, and really, the future of international money itself. To put the scale of this into perspective, central banks around the world now collectively hold more than 36,000 metric tons of gold. 36,000. That is a staggering amount of heavy metals sitting in vaults. And what's wild here is that we are pushing right back up to reserve levels we haven't seen since the Bretton Woods era. If you're not familiar, that was a time when global currencies were actually legally linked to gold. So after years of central banks buying like crazy alongside soaring gold prices, the metal is back in a position of power that it just hasn't held in generations. Which brings us to section 2, why buy so much gold? So the crucial point is why? Why are central banks suddenly hoarding so much gold? Well, it really boils down to uncertainty. The global financial landscape has completely morphed, and these banks are simply reacting to it. Seriously, just look at the sheer speed of this accumulation. Before 2025, official institutions were buying over 1,000 tons of gold a year for 3 years straight. And even though that pace cooled off just a tiny bit in 2025, central banks still bought a whopping 863 tons last year. That is still way, way above historical averages. So what is actually fueling this relentless buying spree? Based on the source material, there are 3 very distinct reasons driving this gold rush. Number 1, protection against geopolitical risk. Look, unlike a treasury bond or foreign cash, physical gold isn't someone else's liability. It literally carries zero default risk. Number 2 is portfolio diversification, which we'll expand on in a second. But reason number 3 is absolutely vital. Independence from sovereign debt dynamics. We all know global debt is at record highs and government deficits are just widening across advanced economies. Because of that, reserve managers are desperately hunting for assets that aren't chained to sovereign debt markets, and gold fits that description perfectly. Let's dig into that first point about geopolitical risk for a minute. A lot of analysts trace this intense spike in gold buying right back to the events of 2022, specifically the freezing of Russian foreign reserves when the war in Ukraine broke out. Now, objectively speaking here, just as a matter of financial precedent, that event was a huge wake-up call. It vividly showed governments around the world that traditional reserve assets, digital dollars or euros sitting in a foreign jurisdiction, could potentially be frozen or blocked during a geopolitical dispute. It really highlighted the danger of trusting foreign institutions. And literally overnight, gold's physical liability-free nature started looking incredibly attractive. And that fear of external risk, it is fundamentally rewiring how reserve managers think. Check out this 2025 survey from the World Gold Council. The consensus is honestly stunning. Nearly 3/4 of reserve managers globally say they now expect the US dollar's share in global reserves to drop over the next 5 years, while they expect gold's share to keep climbing. This isn't just a knee-jerk reaction, folks. This represents a deeply ingrained, forward-looking shift in how these institutions view diversification. Okay, moving on to section 3, the de-dollarization reality. Now, whenever dollar holdings dip even a little bit, the media is super quick to throw around that giant buzzword, de-dollarization. But there is a massive gap between internet hype and actual reality. We are absolutely not witnessing a full collapse of the US dollar, No way. The reality is much more nuanced. The dollar is still the world's dominant reserve currency by a very wide margin. Most international trade is still invoiced in dollars, and global commodity markets are still heavily dollar-centric. What we're actually seeing here is a gradual, calculated portfolio diversification. They're just balancing the scales away from an exclusive dependence on dollar assets.
Now, what's really interesting about this slide is how market participants analyzing the ECB report are framing this shift. They describe it perfectly. Quote, "It's less about abandoning the dollar and more about creating a more balanced reserve portfolio in an increasingly uncertain world." See, central banks aren't drawing a hard line in the sand and dumping dollars for gold entirely. Instead, they're choosing to hold both, while actively dialing back their concentration risk in fiat currency. That is the fundamental takeaway here. Let's head into Section 4. The major gold buyers.
So who is actually driving this buying frenzy? Well, it turns out it's predominantly emerging market central banks. We're talking about nations like Poland, China, Turkey, India, Kazakhstan, and Brazil. Poland is actually a fascinating example. Their national bank was the biggest purchaser recently, scooping up over 100 tons of gold. And what ties all these countries together is a shared core objective. They want to reduce their external vulnerabilities and really bulletproof the credibility of their national reserves. For these emerging economies, gold offers something incredibly powerful. It's an internationally recognized asset that exists entirely outside the control of any single foreign government.
And finally, Section 5. A new monetary order. Gold climbing to the absolute top of global reserve assets marks, without a doubt, one of the most important shifts in international finance we've seen in our lifetimes. And the real significance isn't that central banks just suddenly found gold. It's that they are deliberately rediscovering it. After decades of relying almost entirely on fiat cash and government bonds, central banks are looking at a more fragmented world and deciding that gold is a strategic necessity. So yes, the dollar remains king today, for sure, but for the first time in generations, central banks are signaling they want something else sitting right alongside that throne.
I want to leave you with this final, provocative thought from our sources today. When you look at the incredible data we've covered, the 36,000 tons, the shifting mindsets, the new geopolitical realities, you have to ask yourself, is gold's explosive comeback just a temporary trend brought on by recent shocks, or are we truly witnessing the foundational beginnings of a brand new monetary order? It's a massive question, one that is going to define the future of global finance, and definitely one we should all be paying very close attention to. Thank you so much for joining me for this explainer. Keep learning, and I'll see you next time.